Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 226 for June 3rd, 2019. If you have not had a chance to look at today's report yet, we are going to be discussing report number 296, which you should be seeing on your screen while I'm talking right now. If you'd like to get your own copy of it, just go to TimingResearch.com/reports, and you can get access to the either the web or the PDF version. We're broadcasting live on YouTube at 1 p.m. Eastern Time, but you can also listen to the audio-only podcast version of all episodes of the Timing Research shows on iTunes, Spotify, Stitcher, Podbean, or wherever else you listen to podcasts. My name is David Kosmeter. I'm the creator of Timing Research, and today I have arranged for Jake Bernstein, Norman Hallett, Dave Landry, to join us, as well as Simon Klein, who's back to moderate. So I'm going to go ahead and turn it over to Simon.
Thank you, David. It's great to be back here again and moderating. And what we're going to do now is we're going to go through everyone and introduce ourselves. So let's start with Jake Bernstein of TradeFutures.com to say a little bit about yourself and your website and what you do.
Thank you. The website is trade-futures.com. I've been trading for 52 years. I'm primarily a short-term trader. Trade technical, purely technical. Use a lot of divergence, contrary opinion indicators. Trade primarily futures, although I do have some very big investments in stocks as well. Written 47 books, been on CNBC, Wall Street Week, etc. Thank you.
Okay, thank you very much, Jake. Let's move over to you, Norman.
Well, thanks, Simon. It's really great to have you moderating. You know, I worked for an option firm way back when who would only have a British person as a receptionist that felt that when the calls came in and they heard that British accent, it gave the credibility to the firm. And I'm feeling the same love here. My name is Norman Hallett. I've concentrated most of my career of 38 years on the mental and emotional issues of traders, and I've recently moved to creating simple trading plans for traders because it occurred to me that if you're disciplined to follow a lousy trading plan, you're not going to get very far, or you'll get very far in the wrong direction quickly. So the disciplined trader and simple trading plans are the URLs, and I'm really happy to be here, Simon.
Well, it's great to have you, Norman. And let's move over to you, Dave Landry. You used to moderating me, now we're switching roles. I'm not hearing you.
Dave, you're muted.
Yeah, that's fine with me. I didn't even have to get dressed up, but yeah, glad to be here, Simon, and thank you, David Kosmeter, for having me back once again. To those of you who don't know me, I've been trading for a long, long time, and I have written 3 books on the subject of trading, and I'm the, I guess, CEO or managing member of DaveLandry.com, where I have a trader's education and alert business. I believe that you can only predict the short term when it comes to markets, but you don't make enough short-term trading, so I like to hold on to a piece of that for a longer term time frame, hopefully. I know I should never use the word hope. But I also believe that trading, you must approach trading holistically with money management and also trading psychology. Everybody's a bit of a setup junkie, but I think all 3 are necessary. Anyway, before I go on too long, if you go to my website, DaveLandry.com, right now there's a banner ad at the top, and you can get all 3 of my books for free. And that'll explain to you my methodology. And also there's a free start course in there that's interactive that you'll be able to take. So check that out. Thank you.
Thank you very much, David. And let me see if I can share the right screen this time. Yes, it's coming up. So you can read there a little bit about me. I've been trading for probably about close to 15 years now. Actually starting my professional life out straight out of university, working for Credit Suisse. And I worked in London and then in New York. Then I moved to the trading floor, and I got to see firsthand how a professional trading floor runs. TradeSmart is primarily a trading education business, and we focus on teaching you how to read the market professionally and how to run a successful trading business, which includes how to develop your own trading plan and strategies which fit your own personality and lifestyle. It's not a one-size-fits-all. It's but there is a one framework that fits all. If you have a framework to read the market in a consistent way, then you can develop many different strategies based on that. And they will all potentially have an edge because you're approaching the market using a consistent methodology. And not only a consistent methodology for reading the market, but a consistent methodology for running your own trading business. So you know how to take action during every part of the trading day, what you should be doing when you take a trade, after you take a trade, and how to log your trades, log yourself in your trading journal, and to keep in tune with yourself and as a trader and keep your finger on the pulse of the market at all times. So let's move on to our next question.
Simon, well spoken.
Oh, thanks, Jake. And our next question is on page 1 of the report. And what we're going to do is we're going to go through a quick answer to where you think, or which direction you think the S&P 500 index will move from this coming Monday's open to Friday's close, from June the 3rd to June the 7th. And let's start with you, Jake.
So let me ask a question about how the survey works. How do we know what kind of trader is responding to the survey?
We don't really. I do some surveys occasionally, but yeah, it's primarily the audience of the guests who have been on the show. So it's all types of traders.
We've done a survey here every day since 1987. We go specifically to the small retail trader, people with less than $5,000 in their account. As of Friday, we have 12% bullish case for the short term. Now, in the past, readings under 15% have preceded market turns to the upside. Readings of 85% or higher have preceded, usually by 3 to 5 days, readings that have correlated to tops. So our numbers are a little bit different, but we go to a very specific audience. So in terms of the 60% numbers that you're showing, I'd say in terms of the smaller trader, it's a lot lower than that, because the last few days have definitely scared the daylights out of a lot of people. I can show a chart if I can share my screen.
Sure, go for it.
Let me try it again, because the last time I tried to share my chart, it kicked me out. So let's try it again. Share screen. No, won't do it. No problem, I'll show it next time. But we have the lowest reading now on small trader sentiment since late last year, since December of last year. That's my 2 cents worth.
That's interesting.
I think that's 4 cents worth.
Then I'll give you 2 cents for free. You doubled your money.
So which direction then?
We should expect a low within the next 5 days.
Lower and with a high degree of high probability, I would expect.
Correct.
More than 80%, yeah. Okay, Norman, let's go over to you. I know you love this question.
Yeah, I don't really survey anybody. I just asked Jake. Something was going to happen.
But Norman, when I started charging you money for that, you stopped asking.
Yeah, see, here we go again. For this. Yeah, I'll show you the chart that I have that just looks like there's about 3 or 4 days of air under here where we are. Barring some sort of surprise tweet about a trade deal with China, I don't see much other than a lower probability for the indexes this week.
Okay, thank you very much, Norman. Dave, let's go over to you.
Well, that's very interesting what Jake said, and it wouldn't surprise me to see a bounce, but as a trend follower, I can't really try to outsmart the market, and I'll show you a few signals that I'm seeing now. Timing the market over that short of a period can be a little tough. I mean, if anything, it probably would bounce. Okay, I'm going to talk out of both sides of my mouth, but as far as taking to my trend following mantra, some people call me a trend following moron. I'm going to go ahead and predict lower, and I'm going to give it a 60% confidence. And these things always get a little crazy when we already see today's move. But I think that we'll probably see lower markets over the short-term time horizon, but there definitely could be a bounce this week. But as far as the survey is concerned, put me down for lower, 60% accuracy.
Can I get another 2 cents worth in here?
Yeah, go ahead.
Go for it.
Wait, I'm not the moderator. You go.
I would agree with you, David. The bottom line, Daniel, the bottom line is the small trader is usually wrong, but before they're wrong, they're right for a while. Otherwise, they wouldn't continue to play the game. So remember that the small trader sentiment that we do is a leading indicator, usually by 3 to 10 days. So right now, I would agree with you, Dave, lower, but watch out, because when these turnarounds come on very low trader sentiment, they're usually very fierce corrections back to the upside.
Yeah, and I would love to see, I've been waiting for it. It hasn't happened yet, and I've gotten my buttocks handed to me a few times trying, but I would love to see the mother of all opening gap reversals just for a day trade, even though that's outside of my normal wheelhouse. But I think that could be a big opportunity. Maybe when we get to the trade part, I'll throw that out.
Sure. Okay. Thanks a lot. I'm going to say the same thing. I think based on what I'm seeing on the charts, and we'll go through that with the next question, I'm seeing lower, but we could bounce this week. So I'd say 50-50 at the moment, and I'll explain why when we get to the reasoning in the next question. Simon,
I have a question actually for Jake. It's something I noticed on David's survey was that there were 30% more people responding to the survey than the average, which was quite a jump. And I'm wondering, do you think that has any significance? I asked David this question, and he really didn't think there was much significance to it. I'm wondering are they just a little bit scared from last week and they want to get more engaged, or do they just have stronger opinions in this situation? But an increase of 33% of the responders this week. So you think that has any significance, Jake?
Usually when we see an increase in the response rate, it means they're more engaged. They see an opportunity to do something. Mm-hmm. And that's usually an indication that they're going to be more correct. When the sample size is smaller, which occurs prior to holidays, usually the accuracy is a little bit lower. So the higher accuracy in terms of the higher number in terms of responses usually is a good indication that it's going to be correct.
Thank you.
And I am going to try a screen share one more time. So just bear with me, ladies and gentlemen. I'm going to try it one more time, if I may.
Of course.
Because I think the chart is quite revealing. Let's hope we don't crash. Here we go. Share screens. And
there you go.
You see my screen?
Oh, there you go.
Yeah.
Okay.
Good job.
On the bottom, we've got the sentiment in percent bullish. At the top, we've got price. This is your 85% bullish. Down here, you're 25% bullish, which would be the bearish case. You'll notice in this daily chart going all the way back, the last time we had this bearish reading was all the way here at this major bottom, almost to the day. Prior to these corrections down, for example, right over here, let me put a little vertical line here, precedes the correction down over here. Oh, just one moment. Sorry about that.
Jake, while you working on your charts, is this something that you publish, or or do you sell this, or what's the? How does somebody get a hold of this?
We publish it. It's rather expensive because the survey is costly to complete.
Yeah.
Most of the subscribers are hedge funds, some
Gotcha.
of the biggest names in the business. So here, I've marked all the high readings, and you'll notice they precede corrections. We're not talking huge corrections on the daily chart, but they're definitely precede corrections. And when we reach this high level, which was the highest level we'd had in quite some time, almost to the day preceded the correction we're in right now. But the opposite case holds true right now, with sentiment dropping to the lowest level we've had in a long time. So it's not surprising. I will stop sharing and turn it over to somebody else.
Okay, thanks for that, Jake.
Thank you.
So feel free if you want to share any other reasons why. But let's move on to Norman.
Let me do a quick share here, and I'll just show you the air that I'm talking about. Okay, here is a S&P chart. I've put in a couple of support resistances. This is a daily chart. This horizontal line taken from here. These connective tops. Actually, I drew it after this and have just kept it on all this time. You see a little bit of dancing around that level here, and kind of a rally from that area here. But the fact that we've broken so significantly now, I just this air right here is a lot of air, and we're also below the 200-day moving average. So these are common ways of looking at the market, and they're not necessarily the most accurate. Although you got to watch for traps when you're trading everybody else's way of doing it. But I do think that that we're more likely to see a little bit of weakness before we see some strength. Whether it actually challenges this support area or not, I don't know. But at least it'll rally and challenge probably the 200-day moving average. So this was the reason why I chose to see this week down.
Okay, thank you very much.
May I make a comment?
Sure. Go for it.
The expectation that you're looking at is dependent upon your time frame as a trader.
Mm-hmm.
In other words, right now, in the global picture, looking at a monthly chart, we're looking at an opportunity to buy at support.
Correct.
On a weekly chart, we're below support. So we're looking at an opportunity to turn around. On a daily chart, we've got to be bearish. So again, the question is really important. Short-term, intermediate-term, long-term, because the answers are different.
Yes, that's a very good point, Jake. And we see that in our trading room regularly, that we can have some traders, I could be on the long side and someone else can be on the short side of the same instrument that we're trading. And
Exactly.
we're both making money on it because
Exactly.
we're trading as a swing trade and they're trading as a scalp trade or a day trade. And as it pulls back against me, they're getting in on the short side, for example, if I'm on the long side, and they're making money on the drop, and I'm still holding it, adding my position as it drops. So
exactly.
It depends. Exactly, it depends what you're doing, and there's no right and wrong. There's just what's right for you.
Just don't change time frames in your butt until you find a drop that looks good.
Exactly.
Exactly.
That was one of the biggest things that I learned in the early days of trading. Is like, I'm in an uptrend on the 5-minute chart. Okay, let's buy. And it's like, and then you look at the hourly chart, the daily chart, and you're like, I'm running up against a supply area, a resistance area. Probably not a good place to go be a buyer,
It's a classic example of TMI, too much information. I get emails, Jake, the seasonal is up, but they're talking about the June swoon, the market going down. The daily chart is higher, the weekly chart is lower, the monthly chart is higher, and I just got a signal on the 30-minute S&P to buy. What do I do? Get a psychiatrist. It's the only answer to that question.
Yeah. That's right.
David, let's go over to you. And you're the one that always asks for a little bit of controversy. Maybe we can have a little bit of controversy.
Well, I want to try to get through quite a few things here real quickly. First of all, just back to chart way out, and obviously we stalled this prior peak. Rarely does technical analysis work in a perfect classic technical analysis type of fashion. Easy for me to say. Usually with a double top, it'll stall well short of it or shoot past it to fake out the player. So I find it kind of interesting that we have sort of a perfect double top in here. What's interesting is if you look at these bow tie moving averages, and again, you can get the free book off my website to learn a lot more about those, or take the free market timing course to learn about everything I'm going to show you just here in 2 minutes, hopefully, or less. But when these moving averages come together and spread out, it's a 10 simple, a 20 exponential, and 30 exponential. It's really not that complicated. But it just looks like a bow tie, and then you get a little bit of a pullback. Last time that happened, this is what happened in the signal. And when they come off of all-time highs like we just had, you need to pay attention, because the last one worked out pretty nicely. Not that this one will work out. It probably will fail miserably just because the last one worked so well. But you can see we have that signal on the daily chart. What's interesting is if we flip out to a weekly chart, let me see if I could just really make this thing work on the fly, which is probably not going to be easy, but we'll see. Okay, let's just do this. One thing that I like to do is come up with really simple systems. And if a market is going to go from A to C, it's going to have to pass through B along the way. If C is higher than A, it's going to have to pass through B along the way. And that's just classical technical analysis, or I should say technical analysis 101. So with that in mind, what I did was create a little simple system. And with the S&P 500, and if the S&P 500 is 10% or more away from its weekly closing high, and you have a close below the 50-week moving average, you want to exit. So the last time you exited was right back here before we had the big slide. And you got to be careful with systems. You just use them as kind of a piece of information and not necessarily a mechanical thing in and of themselves. But what I've seen is this would have gotten you out before every major crash in the history of the markets. No guarantees. If you want guarantees, buy a toaster. But we are getting a potential signal here because we did close below the weekly. And notice this little blue line up here. This is a 10% line. So when it goes 10% or more above that blue line and you're below the 50-week moving average, you want to get out of the way. The buy side is a little bit more strict and stringent. Let me just, I know I'm kind of going long, but let me just try to show you one more thing here real quick too. If we get back to the weekly chart with the moving averages, the other thing here is usually after you have a major high or major low, and then you get a weekly signal, it could get fairly ugly pretty quick, and it's gonna be hard to just go back in time real quick here. But if you go back to like 2008, you can see we had a signal right before the bear market. We had a buy signal after the 2002, 2003 low. So that's the next thing I would watch. I would watch the daily bow tie. We were just talking about different time frames. We now have a daily signal. I would start watching your weekly chart and watch those moving averages. And because the price has crossed below the exponential moving averages, they are beginning to turn down. And if we get a weekly signal, then I would begin to really get worried about this market. So I think we're on the cusp of something possibly bigger happening. And I hate to use the word hope. I hope we go right back up, and I hope I'm completely wrong and worried for no good reason. But I think that we could have something, we could be on the cusp of something bigger happening here.
Okay, thank you very much, Dave. So can everyone see my screen?
Yes.
Yes.
Everyone who's been on the show or knows my trading style knows that I'm kind of pretty much a pure price action trade, although I do have one indicator on here, which I use for certain types of trading bases. How to know when it's going to be a fake out, or how to know when to trade the base before the base breaks out. So if you look at we start from the monthly chart, you can see that this move up did make a slightly higher high here. And as Jake said before, this move down is sitting on top of a supply become potentially demand area. So we are sitting on demand here. Even though we're moving down, we could stop here and potentially push higher if we look on the monthly chart. So it's going to be a battle between, I always say this, between the move down and the kind of demand area, what's going to win. So we may get some sideways choppiness happening over the next number of days. If we look at the weekly chart, we go from here, and we actually saw this happening originally on the daily chart. We see the weekly chart, we're in an uptrend until we go below this pivot over here.
Looks like the market's listening to you. We're getting a little rally here.
So I'm going to show you why we're running, why we could potentially rally here as well. But at the moment, the line in the sand for the uptrend on the weekly chart, or on any chart, but if you look at it on the weekly chart, was 2,800 area. Once we went below this pivot and this area here, we've broken the uptrend on the weekly chart. We're in uptrend all the way up here, yeah, and we've broken it now. That started when I was last on the Timing Research show. I think it was a month ago. We were over here, and we'd broken this move here. This lower high over here broke the daily uptrend, the way I view it. Yeah, the way I look at trend using pivots, and we put in a lower low. So we're in downward motion at the moment. Now it could have gone back up, but it didn't. So we continue in this move down, but now we're coming into a demand area. And I always say, if you're in downward moving markets, when you hit demand zones, you generally move up to go lower. Yeah, and hence lower highs, lower lows. Yeah. So this is a pretty strong area, and this is our first time back into it since we actually went all the way up from here. So that's why I'm saying we could get a move up, and we get bullish if we go above here. If we go back over 2,800, we get bullish. So moves up are sellable at the moment, but it doesn't mean in a downward moving market that you can't get a move up. Yeah. We have moves up here, we have moves up here, we have days up. Yeah, these are up days, and we may get an up day today as well. Yeah. And you can see this area is a significant area, and you can see how we've kind of spiked up once and again. So if we go below the lows here, then we're probably going to continue to the next level down. As price moves between levels of supply and demand, we've got another level on the lower time frames, like down here around the 2,650 area. And again, anywhere within this area down, even to probably the lows of this bar, say 2,626 could still be bullish. We could still have another based on the monthly chart. Yeah, because we did put in a higher high here, and this pullback from a trend or pivot perspective is potentially buyable. And we are on the other side of a big bar down, which sometimes produces an opposite move to the upside. You get equal and opposite forces. So this is an interesting area, and that's why I said we could get a bounce, but we're still we're in a bearish market now on the weekly chart and on the daily chart, hitting an area where we could bounce. So that's why this is what I call in the market. There's two different modes the market can be in. One is, and again, it depends on the time frames. And one is the decision making, where the market could do this and could do that, and the odds are like kind of 50-50. So it's like sit on the side and wait for the market to show you which way it's likely to go, or where there's opportunity in the market where the odds are high, much higher in one way than the other, and then you need to find trading opportunities. So that's why I think we're in an area where we could get a spike to the upside, but we're still bearish. We still look to sell that so long as we don't go over the 2,800 area. So this is why I'm saying we could get a bounce, but we're still in a bearish market, especially on the daily and on the weekly charts.
Hey, Simon, without giving away your position, do you have a long or short position in the futures here?
I'm sitting on the sidelines at the moment.
Okay.
Actually,
I was wondering how you were being so calm when I moved about 10 minutes before you were talking.
that really leads into the next question, which is kind of interesting. The next question is a fascinating question, and I think it's great that you asked that. And let's go straight into the next question. I'll stop sharing my screen. And the next question on page 4 of the report, the question is, what methods or techniques do you use to overcome the emotional aspects of trading? And Jake, let's start with you.
When I practiced clinical psychology back in the 1960s, I learned to be clinically dispassionate, not to get involved with what the patient was feeling or thinking, because that would lead me astray. So my technique is this. Before I make a trade, I assume it's a loss. I assume that it's lost money. If I'm okay with the amount of money that it's going to lose, I'm okay with the trade. I put the trade on and I literally forget about it. Don't look at it during the day. Don't micromanage, because I've already accepted the loss psychologically. That has always worked for me. And when I veer from that philosophy, from that psychology, from that approach, I get into trouble. So I've learned through long and hard experience, I take my loss before the trade has happened. If I'm okay with that, then the only result can be good news one way or another. Either I didn't lose as much as I thought I was going to lose, or I make money, or I break even. That's my best technique. The second one is I'm always by the rules. I can't, when it comes to judgment on people, I can talk to a person for 2 minutes and tell you if they're going to be a successful trader or not. I use my judgment. But when it comes to judgment, my judgment in the market absolutely sucks. So I will not use my intuition with the market, no matter what I'm thinking, no matter what I'm feeling, and I avoid certain words. I avoid hope. I abandon hope. I avoid looks like. I avoid anything that's not purely objective, that has worked for me. So that's the long answer to your short question. And a very good question, by the way.
I love that answer, Jake. That's, absolutely perfect answer.
Thank you.
Can I ask Jake a question real quick? Jake, would you say leave it alone, or are you putting in a hard stop and going about your business, or some sort of limited orders to take profits, or what
Yes,
is there?
absolutely.
Okay.
And of course, I trade multiple positions. So I'm always trading for one thing, and that is what I call the danger zone. The danger zone is my first profit target. Once I've taken some money off the table, I'm back to break even. Everything else is a gift beyond that. Now, 80% of the time, I'm at a trailing position. I will get stopped out at break even. But the 20% is what I'm going for, because that's going to be the big money.
Wow. That sounds great.
Well, fortunately, it works. It's kept me in. It's kept me wealthy.
Yes.
Let me say one more thing.
Yes.
I distinguish between normal and abnormal. Normal behavior in the market teaches me nothing. I only learn from abnormal behavior. So I'd like to look at the market and ask the question, is it normal? Is it typical for the market to be doing right now what it's doing? If it's not typical and it's not normal, I know change is coming. But if it's normal, I've learned nothing about the market. So I look for abnormal opportunities, divergence, quote unquote oversold, quote unquote overbought, and those keep me on the right side of the market most of the time. As an example, let me do this. Let me show one more thing. Ask the question, what is normal for the market at this time of the year? Going all the way back. So let me see if I can do a screen share. Technologically, I'm not accustomed to this particular format, but let me see if I can do this without screwing up. Moment, please. How do I do this? I can't do it now, so I'll figure it out while someone else is talking. Go ahead, guys.
There's a green button on the left that says screen share. Click on
Yeah,
it.
I'm trying to find that cursed green button.
It reveals itself when you move the cursor to the left-hand side of the screen.
It ain't doing what it normally does.
Yeah, and then once it shows itself, you have to click where it says application if you want to show an application or a screen for the entire.
Yeah.
It's not easy.
Believe me, I'm familiar with that process. It's just not cooperating.
Yeah, I know. I agree with you. It's not easy.
Go ahead, guys. It's all right.
Yeah, I think this is an absolutely wonderful question, because I think this is where a lot of beginning traders kind of fall over, and despair hits them, and they kind of move on to other things, being defeated by the markets or by trading, and they don't think it's possible to succeed. And so being in control of what you're doing, or understanding what you're doing, is key. But let's pass
I've got it. Can I do that? Sorry about that. Here we go. Let's try it again. Nope, it's not happy with me. Go ahead, guys.
Okay, Norman, this is your favorite topic in trading.
You'd think it was, but yes, it is.
It's not the general public's favorite topic, but it should be, because as we've talked about this before many times, it's not the sexiest topic to talk about, but it's probably one of the most important topics.
Yeah, I mean, I just think that any trader, especially those that are starting out, because those people that have traded without discipline already know this, that you need to devote a time every day to honing your discipline, and whether that means doing a subconscious training, doing some self-talk, doing what you need to do to, what I call, keep a positive expectation. And I don't mean where if you have a losing day trading, which you'll have plenty of, that somehow you sugarcoat it. But I think you have to, positive expectation means that you expect to do well each day, because you have a trading plan that you've back tested and that you forward tested, and will work if you just stick to it over time. And that each losing day or losing week will be offset by winning days and winning weeks. And in the end, the process that you've adopted will survive and prosper. But you must make a commitment to to your discipline. And the easiest way to do that is through journaling. And I give these to the people who take our course. It's emboldened the disciplined trader on here, and these are just blank pieces of paper, because no two traders really journal the same way. And I don't mean journaling your where you bought and where you sold. I think that's important. I see that in my statements and in graphs online, but I'm talking about the emotional and mental challenges that one has during trading. And I like the expression that I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. And I think if you repeat that to yourself, put a little sign up, I'm a wise and disciplined trader, I do the things that a wise and disciplined trader does, you'll actually start being a wise and disciplined trader, and you start doing the things that a wise and disciplined trader does, because you're starting to identify with the things that you're saying. So, of course, I can talk a long time on this, but taking trading discipline seriously is, I think, your best way to, in some way, whether it's journaling, subconscious training, whatever, is the best way to get discipline and win at this.
Thank you, Norman. So, Dave, let's go over to you.
Okay, I'm going to have to throttle myself back, but everything that I've heard so far is fantastic. The bottom line, I mean, I could go on and on about trading psychology, and one thing you have to realize, if you are newer to trading, it never gets easy. It'll get a little easier, but it never gets easy. I'm back and forth with my contractor. In fact, I've got my cell phone on today because I'm building a new house with a new office, and I'm insulating the walls, and they're having the hardest time getting the right acoustic insulation in there. And the reason they're getting the insulation is not so much to keep the noise out, which is somewhat important, so I have a quiet office, but more importantly, so when I'm in there dropping F-bombs, people around me, now that I'll have neighbors because I moved from 6 acres, won't be able to hear me. So just keep in mind that it is normal to feel that way. It's not sexy, as Simon pointed out, but I think you'll find fairly quickly that if you can figure out or the market is a very expensive place to figure out you. So make sure you put some things in place, and I'll hint upon a few of those in just one second. One thing you have to realize is that we're not made to trade from both a physiological standpoint and a psychological standpoint. The market goes against a lot of things in life. In life, if you work really hard and do things a certain way, usually you will have a positive outcome. But in trading, you can end up with an outcome bias where you could do something really stupid and make money, and then you could do just the opposite, as Jake pointed out. You take a trade that you think will work and just flat out doesn't work. The physiological part that's really tough is that a negative emotion from a neurological standpoint, easy for me to say, has twice the emotion as a positive one. And that's what creates that gambler's high. Gamblers make a little money, and then they lose some money, and they get very emotional, and they're trying to make that money back. Even on days sometimes, and I've got to become better myself, and I recognize that, and I'm working on it. And like Jake said, I got Norman said, I got the Trader's Journal right here. But there's been a lot of days where I've had 3 or 4 positions doing really, really well, and I have one position going against me, and I'm in here dropping F-bombs, and then at the end of the day, I had a positive P&L, and I realized I wasted all that energy for nothing, and that's just part of that. Just comes with the process. So I was asking Jake about his orders, and the reason I asked him about his orders is, if you could let the market make some of your decisions for you, your life will be a lot easier. If you stare at that screen all day long, you're going to become very emotional, because a lot of your observations will be negative observations. As far as even on good positions, a lot of times they'll go against you. So if you could put in an order, if the position allows, of course, but a stop to take you out, sometimes a limit order to maybe take those partial profits. And I kind of agree with Jake. It's like I'm a short-term trader, but I'm willing to take those partial profits and then ride the rest to see what the market can possibly give to me. And anyway, so that's just a few things. Let the markets make as many decisions as possible, because one more point is that every time you make a decision, it requires some stress and emotion. And if you didn't have any stress or emotion, any decisions, you couldn't make any decision whatsoever. You would literally be in a assisted living facility or a mental ward or whatever. So it's a lot to it, but I think that if you just keep it simple and like Jake said, accept the loss possibly going in and try to be as even keel as possible. You can't eliminate emotions, because emotions come with decisions. but try to be as even keel as possible. And again, I know I can go on and on. I'm trying not to. But another thing too, obviously, is exercise. I met Jake down in Australia, and his day consisted, back then at least, of getting a massage and getting himself, ready for trade and being as relaxed as possible. So do some sort of relaxation techniques, exercise, and like Friday had a horrible day, but no matter what happens, no matter how bad your day is, if you get that exercise in, you're going to be able to cope with that day a lot better. But I'm just scratching the surface there. I have a lot more to say about psychology. Like I said, read the books, take the courses, and all that. I have plenty of that on the website. So,
can I add one thing to that, Dave?
Oh, absolutely, Jay.
Many times we don't appreciate the value of technology. Example, I give many talks in the Bay Area here in San Francisco area. I'll go to a company like Juniper Networks and give a talk and teach people how to trade, and I'll say, now here's the good thing about methodology. We can put all of this on a computer. We can have it generate the trades for us, and it can generate targets for us, and it can even put orders in for us. And somebody says, hey, that's a great idea. I say, that's a great idea. We're talking to a room full of engineers who can't even figure out how to use a computer for trading. What's going on here? So I think we need to really embrace technology. Put your stuff on the computer. I'm not saying let it make the decisions, but certainly let it generate targets for you and put in orders for you if you want to. But use the methodology that's going to make your life easier so you don't have to make as many decisions. Every time you make a decision, you're putting yourself in the way of making a wrong decision. So let the computer decide for you, provided your underlying methodology is solid.
Yes, I agree with that, Jake.
Well, thank you.
So let me answer this question like a double prong. I've been grappling with this idea because I've been coaching people for probably over 10 years now as well, and see all different sorts of issues that individual traders have. And I think it was interesting. I think one of the biggest problems that beginning traders have is, and wait for it, drum roll, they don't know how to trade. They don't know how to trade. They don't know what's involved step by step in trading. Just staring at a screen, watching something move up and jumping in and out of trades is not trading. There's a lot more that goes into trading than that. So I think a lot of the stress happens because if you don't know what you're doing and you're trying to do something and it's not working for you, that's pretty stressful because you've got no idea what you're doing and you don't know what's working for you and what's not working for you or what you should even be doing. And I see that with a lot of traders that come to me, at the beginning of their careers, and it's just not working for them. And most of them don't have trading plans. They don't have a way of reading the market. They don't have anything that puts the odds in their favor, and they don't know exactly, So that would be pretty terrifying. Just imagine the analogy. I use this. You're driving down the Autobahn with your friend, and let's say he's driving a Ferrari at 200 miles an hour, and you're in the fast lane, and he hands you the wheel and he says, okay, go on, you drive. And you've got no idea how to drive. And the car's going at 200 miles an hour. And he goes, take the wheel. That's pretty terrifying, isn't it? That's how most people trade. So I think a lot of the emotional issues that people have with trading are because they didn't start the right way and they thought it would be maybe easier than it turned out to be. Actually, once you get there, it's very easy, but getting there isn't. Once you put it down, it's actually very simple. What you need to do, very simple. And I've noticed my own development as a trader over the years, and I think what Jake said is one of the key things. If you accept the risk when you take the trade, and you accept that you've already lost that, I say that to myself, I'm taking the trade, how much am I risking? Say it's $1,000. I'm paying $1,000 to take the trade. It's like I'm buying a lottery ticket, $1,000 worth of lottery tickets. It's gone. Now, if I make money, that's good, it's a bonus. And if I don't, well, I didn't lose anything because that's the cost of doing the trade.
Simon's like getting married.
Even better.
You get married, you accept the loss when you take the trade.
Or the gains. You have to work.
Can I interject one thing? You made the Ferrari analogy.
Yes.
I love fast cars. I have a collection of very fast cars. But the problem is this. People say, can I drive your car? And I say, are you kidding? I'm not going to let you drive my car. You don't know how to drive it. You're going to kill yourself. My associate, Chris Moody, who's a brilliant programmer, and I have programmed everything that I do and put it on a website called JakesTradingStrategies.com. We have members. We teach them everything they have to do, from entry to exit, to risk, to triggers completely objectively, and there are still people who screw it up royally, who will not understand it because they don't know the basics of trading and they don't understand the discipline of trading, which is very important. It's the weakest link in the chain. You can give them all the rules that you want and they'll still find a way to mess it up.
Yeah, that's very interesting. You can have here's a prime example of running a trading room, and you can have, say, 10 people following a trade that you're doing, and you get 10 different results. Someone mentions a trade that's about to happen, and someone jumps in before, and maybe it doesn't happen yet, and they're in the trade. And then you have, because they want to make more money, and then you have someone else who kind of, puts too much money on the trade because, they're new in the trading room and they want to make some money, and they're in there to make money, and they don't realize that maybe the trade might not work. So don't put it all on one trade. Risk management, very important. So, you have to I always say to people, in order to make money trading, you have to learn how to lose money the correct way. And losing money as people, we don't like being wrong. And in trading, when you're wrong, you lose money. And put the two together, it's a disaster for human beings. We don't like being wrong. We don't like losing money. And that's what you get as a trader. The quicker you come to terms with that losing is having losing trades is part. I have some of my successful traders like you, Jake. Their batting average is something like one with 40%. So 6 out of 10 trades are losers, but he's making, he made last month 33%. And it's those winners that hit. I mean, I may show people, maybe I'll show the results in a future webinar that I do, but it's outstanding. I mean, this guy is an outstanding trader. He doesn't care to take losing trades because he knows he's going to hit some big ones. And that's what he's playing for. And he knows he's going to have those. So knowing what your results are ahead of time, for example, knowing that, say you have a batting average of 40%, so you're only 40% right, you're going to hit 40 out of 100 trades are going to be winners. And knowing that when you're going to lose a trade, you're going to lose whatever, say $1,000 if that's what you're risking on the trade. But knowing at the end of the month, you're going to be up most months, then you've got the confidence now to take those losing trades because you've got a winning system.
True.
But if you don't know you have a winning system, then taking those losing trades is just reinforcing that you don't know how to trade.
True.
Simon, you remind me of something real quick. The late great Mark Douglas once said that a winning salesman, or a losing salesman, I should say, let me just rewind it. A winning salesman will make a few sales calls, get some rejections, and then keep chipping away at it because he knows he's getting closer and closer to the kill. Whereas a losing salesman will lose a few phone calls, whatever, or not makes a successful sale call, and then he goes out to drink his lunch. And so as long, like your guy that's only 40% correct, which by the way is not bad, it depends on what he's doing and depends on his time frames and if he's doing any sort of trend following from a longer term time frame is only about 28% correct. But he knows that he just keeps chipping away at it, he's eventually going to get to those winners, and that's the tough part is not giving up right before that big winner, and then of course watch 3 or 4 winners go by and say, well, I'm going to start trading this again, and then you go right back into the hole.
Can I say something here?
Go for it.
Mark Douglas was my first mentoring student many years ago, and one of the things that I told Mark, which a great trader told me, is this: to make money as a trader, you have to not care. As soon as you start caring, you have emotional attachment. It's counterintuitive. The more you care, the less you'll make. The more you're clinically dispassionate and detached, the more you'll make. It's really simple, but very hard to accept.
Yeah, that's true. And I think any trader who's reached any level of success can probably relate to that. The more when you care about your positions, you're going to more micromanage, get yourself out of sometimes winning positions before they reach their target. I'm sitting in a trade at the moment. I've been in it. It's been underwater. And now it's actually up about 1 hour at the moment. I've got another bit more to go and I'll reach my 2-hour target. And these are 2 trades I took in the trading room. One reached the target already and one it's been kind of fluttering around and it's finally starting to go. And I'm sitting in the trade. I'm not, take me back to my beginning days as a trader. I'll be sitting there. I mean, I remember I was on the trading floor once in the fund that I was trading for, and I was glued to the screen. Every single tick was like another heartbeat, I was glued to it. It's like nothing else existed apart from what was going. I used to go to, I mean, you guys can probably relate, and probably beginning traders,
Been there, done that.
You go to sleep at night and you're dreaming candlesticks. I don't do that anymore. Other things to dream about. Beginning traders dream candlesticks. It's a funny thing. You know?
Is that a dream or a nightmare?
Depends if you're in the winning trade or not. But yeah, so I think the psychology is a study of why people behave in similar ways in similar circumstances, not why people are different. It's why we're very similar. And if we can come to terms with that and do what we need to do and learn how to trade in the correct way and accept risk and accept, taking action when you don't know what the outcome's going to be. And much of life, a lot of life is like we make decisions in life, we don't know what the outcome's going to be. So trading is one of those things that you make a decision and you don't know what the outcome is be. But the real interesting thing is you do know what the outcome is going to be over a large number of trades. If you have a positive expectancy system that you're trading, you know you're going to make money. So if you have that confidence that you're going to follow the system that makes money over time, and each individual trade is meaningless by itself, then that should give you the confidence to understand, that you're going to make money over time. If you don't have a positive expectancy system, as I said before, then, it doesn't matter how good your psychology is, you're never going to make money trading. And it's going to probably accentuate your bad psychology and make you feel bad. And there'll be a lot of work to do to get yourself up from being knocked down by the market, so to say. And people ask me, and probably ask you, how's the market treating you? I said, the market doesn't treat me anything. I go and trade opportunities that present themselves in the market. So the market's just the flow of money, and you just have to put your at the right time, enter and siphon that money off into your bank account at the right time.
Point of information. We know from studying trading strategies that even the best strategies in the world will lose 6 times in a row. Most traders cannot accept losing twice in a row. And so what happens is they lose money twice. They say, I've got to change my strategy. It's not working. But I've got discipline. I'll stay in it. They lose money 3 times in a row. They say, that's it. I'm done with it. It should be easier than this. But if they don't know what they're going into to begin with, at least 6 consecutive losses, they won't have the money to withstand that kind of drawdown. So they're out of the game. So it's a losing proposition for them even before they begin.
Yeah, and especially people that were told to risk 5% per trade, for example, that ludicrous 5% per trade. Anyway, so what I'm going to do now is we're going to go quickly through everyone, and let's put the 2 questions together. Any trade ideas, or will we go through a quick trade idea, and any closing thoughts or anything you want to share about what's going on with your site or anything coming up? Or I think it's been a very interesting session so far, so I don't mind spending more time on the psychology. I think a lot of people are interested in that.
So who's first?
Let's start with you, Jake.
Oh, no. So we are at the cusp of some very big moves that have started in some futures markets. Coffee, cocoa, sugar, believe it or not, a market I hardly ever trade, orange juice, interest rate futures, all in different directions. The ones that I mentioned in terms of the tropical commodities are all moving higher and will likely continue. We have very big commercial buying activity in orange juice futures and in the grain and soybean complex markets. So the only thing I can say is if you want to learn the specific trading strategies I use, JakesTradingStrategies.com or my website, trade-futures.com. In terms of markets, I look for an opportunity on the long side, but just in S&P, just a little few days from now, because normally the first 10 days of June seasonally is on the downside. So everything that's happening right now is normal. I'm waiting for that abnormal activity, and it hasn't developed yet. I've said my piece.
Thank you very much, Jake.
Thank you.
Norman, let's go over to you.
Yeah, thank you. I want let me bring up a quick chart here. I did want to mention that I always advise traders to trade less capacity than they're capable of trading, to kind of take the edge off. In other words, if they know they could have a bigger position, somehow that helps them mentally to say that it's okay when they do take a smaller loss. I want to show you a chart here. This is the Japanese yen. This tends recently to be moving opposite of the stock market. I'm sure it's got something to do with interest rates and the fact.
Carry trade. It's the carry trade.
Yeah. Oh, the carry. Yeah. It's as you can see, that we've made a couple of tops here. This is, of course, a support resistance line of which we broke over. This is, again, a daily chart. Seems to me that we'll test at least this high, but maybe the absolute high here on a run up in the yen. So this is what I'm watching here. You can get some 1-2. If you're not in it yet, you may want to consider waiting for a test of the of what was resistance but is now support, and then taking out this high to initiate a trade. But I think I have some good feelings about the seeing a lot more green in here than red. I'm feeling pretty good about some possibilities on the long side of the yen. But again, you've got to have a process. I do want to mention that again, I'm concentrating on the mental and emotional issues of trading, but at the same time working with simple trading plans. And if you haven't seen simpletradingplans.com, you should take a quick look at the inside of what we're doing there. And there's a kind of a video on the site simpletradingplans.com where you can see the site and what's offered as far as the content. But I think you'll be inspired by the fact that trading doesn't have to be complicated, and a simple trading plan is by definition something easier to stick to. But it has to have the right components and kind of break all that down for you. So that's where I am here, and really enjoyed today's conversations.
Thank you very much, Norman. Dave.
Yeah, this was probably the best show I've ever attended, and I'm bummed out that you got to host it. So there's Simon.
Get together again. No, it's been really
fun. This was fantastic. I'm almost hesitant to show as far as a possible opportunity. I'm a little hesitant to show this trade because it goes a little bit against what I preach, because I am a trend follower. But I think that we could see a pretty good opportunity in here if you come in and the futures just gap way down, and I think it could probably dovetail into possibly what Jake was saying, and you could have this exhaustion move, this big panic come in. I don't know if it's going to be a Trump tweet or whatever, but if we come in and see that big gap down, look to play an opening gap reversal. I'm just talking about a day trade. I'm just talking about this for a lot more seasoned professionals, not for somebody who's in normal trend following mode. So this is a little bit outside of my normal wheelhouse, but I just want to throw that out. I think we could have a potential big opportunity. Now, as far as just to kind of close the loop on my stuff, if you go to my website, DaveLandry.com, and let's see if I can pull it up here real quick, then you could get all three of my books actually for free right here. And that's also going to give you access to a market timing course, which I made free given the nature of the market, both now and then going back into October when we saw the last spill. And I think that just very simple concepts there are going to really help you out. And I get into the psychology and the money management, all those things we talked about today. So I encourage you to go out and do that. Get to know me first. There's a lot of free stuff out there. So get to know me first. Get a feel for what I do. I also do a weekly webinar. Come to those. Those are free every Thursday at 11 o'clock Eastern, 10 o'clock Central. So that's it for me. Thank you, Simon. You're a great host, and congratulations on your show today. Fantastic. And Norman and Jake, it was a great show. Good seeing you guys too, man. It was just a lot of fun.
Simon, Dave, and Norman, great work today. Really appreciate everything you guys said. Right on the money.
Okay, one last thing before we wrap up. I want to share, and you can see my screen. I talked about this trade a number of months ago, I guess. The trade gold long trade, and look at it going. Now, I'm seeing gold this year potentially, if it breaks above these highs, going up to the 1600, and I can see this happening. You can see it turning here on the monthly chart. You can see it's turned, and we're kind of having quite a strong move to the upside. So I can see this has been a base, or it's been kind of hitting this area over quite a number of years now. And I think it's about time to kind of break it. We can see a nice big move. Some of my traders are in this already from down here, anticipating that. So they're doing well. And again, the reward to risk on this is pretty big. talking about potentially a 300, depending if you got in down here, around a $300 move. It's a long term.
Turn.
And finally, website. Finally, anyone who wants to know more, you can go to my website, put your details in here. You can get free video on how to build a profitable trading strategy. Be on my mailing list. I do free webinars at least once a month. And again, I posted one of my trades from today here. It's a Euro-Yen long. I posted that before. It's a lot of work involved in doing that, but I did it for the benefit of those people. You can see a trade and explain what I was doing. And again, there's one here on the pound. And I'm looking for this. I'm long the Aussie dollar at the moment, and it's almost at its target. I was looking for it to move up to kind of this area. So it's kind of pretty much.
I'm with you on that one.
Okay, so it's been great.
Don't tell too much. I'm still, my target's a little further away.
Yeah, if you draw
I've been in this all day long. Are you in the Aussie as well?
I've been in it for weeks off an hourly chart. It was funny. You were talking about being underwater. I was laughing to myself. I've been underwater for so damn long in that trade, but it's like it was hard not to get up. I reached the point where kind of like Jake, just turned off the screen and closed my eyes, and then I come in this morning. I'm like, oh, okay. Well, looks like it's finally starting to work. I finally went to work.
Beautiful trend going on here. So yeah. Anyway, I'd like to thank you guys. Jake, it's great to have you on the show as well, and Norman and Dave. Finally, as I said before, it's nice to be on the other side.
Great job, Simon. That fake British accent really worked out.
Yeah, you can knock off the accent now. I think we're getting offline.
And Dave, great goatee. Looks really classy, very distinguished.
Thank you, Jake.
And I'm going to pass that back to David. So thanks a lot, everyone. Great, guys. It was fun.
Thanks, guys. Lots of good discussion and lots of good information today. So just a quick reminder to everyone watching, be sure to subscribe to Timing Research on YouTube and your favorite podcast directory. You can also go to TimingResearch.com to get instant access to the recording of this show if you want to rewatch it, or any of the past shows. And Analyze Your Trade will be back tomorrow, episode number 80, 4 p.m. Eastern Time, with Jeremy Newsom and Michael Filagera. So you can always access the live episodes at TimingResearch.com/live. And finally, just want to thank my guests again for this episode. Jake Bernstein of Trade-Futures.com, Norman Hallett of TheDisciplinedTrader.com, Dave Landry of DaveLandry.com, and Simon Klein of TradeSmartForex.com. Thanks, everyone.
Thank you.
Thanks, everyone. Bye-bye.
Thank you, Simon.